Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. I'm so glad you're here. Well, it's Monday. The markets are back open. What's going on? Dow's up about 150. NASDAQ's kind of flat. All right, I think we're in this topping out process. We're going up, retesting the highs, topping out, and the market's getting ready to come back in. Some things are starting to roll over. Apple Computer's starting to come back in. The SPY starting to come back in. They're down. They're sitting on their 20-day. Now, they may bounce up and retest the high again, but I do think eventually they'll break through that 20-day moving average and come back in. Right now, we're still in that buy the dip mentality. Every bottom, every time we get down that 20-day, little bit of a dip, they buy it up again. They buy it up again. Will we make new highs in this market? I'm saying we will not. It's possible. We're about 250 points off the high in the S&P. It's possible we run up there, but I don't see it. I think we're going to start to come back in. Just my take. Your take may be the complete opposite, and that's perfectly fine. Let's get over to the real estate market. So the real estate market over the weekend, they always come out with the articles. Oh, the articles always fascinate me. Let's start with the first one. All right. So there's going to be a convincing price rebound to come next year. A convincing price rebound in the housing market is going to come next year. Now, this is Danielle Hall. She's the chief economist at Realtor.com. Well, she might have some skin in the game. She wants the markets to go up so she can keep her job. But apparently they polled 117 economists, and all these economists agree that the market's going to continue upward. The housing market's going to continue upward until 2027. Wow, that's incredible. I know this article can't be real because you can't get two economists to agree on anything. And they say they got 117 economists to agree on this. You can get an economist to point any direction you want. Up, down, sideways. There's all different takes, all different views. Now, my view. We're going to come in the housing market. We're going to come in by about 50%. And I'm going to talk more about that later. A lot of people don't believe that. That's perfectly fine. I want to get to the second article. The second article that I read over the weekend came out and said, economist sees potential for a rally in the housing market. Now, this is the chief economist. You ever notice they're always the chief economist? They're never like the lower economist. They're always the chief. Well, this is the chief economist at Cortland. I don't know what Cortland is, but the chief economist at Cortland believes we got a potential rally coming in the housing market. He goes on to say that we're seeing a floor in the housing market right now, and this floor is going to be the potential rally going forward. Now, the one thing I find amusing about these articles, I really do. All right, so these articles are the same exact type of articles that were coming out in 2006. Matter of fact, I want you to Google this. Google this article from 2006. The headline read, "Optimism is rising on housing market." Now, this was an LA Times headline, right? 2006, December 1st. What happened after that? Well, hurry up and buy right before the 34% crash happened. And that's what they're doing now with these articles. They're trying to get you to hurry up and buy right before the 50% crash happens. Now, this is just my take. Now, a lot of people, they don't agree with my opinion, and I get that. This is not a popular opinion. If you just bought a house, you do not want to hear that your house is going to drop by 50%. That's not what you want to hear. And I get that. So I'm not that popular. I have a lot of haters that are making my channel grow big. We're almost at 3,000 views. And the haters are pumping that up because, well, I love Eddie Lou's comment. Okay, Eddie Lou makes a comment. He goes, "Mike, I don't really understand why you have all these haters. Don't they know that they could just change the channel and go to one that is their point of view, that the market's going to go up? They could just call their local real estate broker, call them up and go, 'Hey, is now a good time to buy?' He's going to tell you, of course it is. But you see these haters, a lot of them, they get a little bit scared out there when I tell them the market's going to go down by 50% because their largest asset, which is their house, is going to go down by 50%. And they don't want to hear that. They do not want to hear that. I mean, I'm unpopular. They call me all kinds of things. They say that I'm trying to scare the people so that I get more views on YouTube. Give me the thumbs up right there. They're calling me a liar, a scam artist. This is my favorite one. I'm dangerous to society. I'm a danger to society. Look, I have a completely different view. These articles are a danger to society. They're trying to get you to FOMO in at the terrible time to buy. These articles don't mention that houses went up 50% during the pandemic. They don't mention that interest rates have doubled. They don't mention that this is probably the worst time in history to buy. They're trying to get you to believe that you either have to buy now or be priced out of the market forever. These articles are dangerous in my opinion, especially if you follow them. But a lot of people say I'm a danger. I'm a danger to society. I'm scaring the people. Oh, you can't make this stuff up. But what I want to talk to you a little bit about is what's going on in the banking world today. Now, this is going to tie into real estate. This is why real estate's going to come crashing down hard. All right, now this is going to take a little bit of explaining here, but it's really very simple. All right. Most people have never heard of the Federal Home Loan Bank. Federal Home Loan Bank. All right, there's 12 of them. 12 of them, they're throughout the United States, and there's 12 of these banks. Okay, now what these banks do is they're a government-sponsored program that they will let any bank that is a member of the Federal Home Loan Banking System, they will let any bank as a member borrow money from them. They will take the collateral from the bank and they will loan them money. Now let's think about what type of collateral the banks have right now. Well, they have residential real estate loans. Now you're locked in at 2.8%, but that means the banks are also locked in at 2.8%. So when that went from 2.8 to 7%, all these loans lost about 40% of their value. These loans went down on the bank's balance sheet. Commercial loans, they're down about 50%, some as much as 70% on the bank's balance sheet. Okay, what about the treasuries that they bought? They bought the long end of the curve, the 10-year, the 30-year. What happened to these treasuries? Well, as rates go up, the treasuries go down. So these assets went down. Now, here's where it really gets interesting. All right, corporate debt. These banks have corporation loans on their balance sheet. What happened to these corporation loans? Well, they go down as the rates go up. But you see, corporations right now, here's what they're not telling you. The mainstream media goes out there and they tell you the economy's doing great. Everything's doing great. Real estate's booming. The economy's booming. Why are there more corporate bankruptcies right now this year than there were? You have to go all the way back to 2010 to find a time when it was this bad. Things are not that good. Corporations are going bankrupt in record numbers. All right, so they have this corporate debt on their balance sheet. What else do they have on their balance sheet? What about car loans? Car loans delinquencies are spiking straight up. It's worse than it was in the great financial crisis. We're repoing 15,000 cars a day right now. This is not good times. They'll tell you that everything's great. Look, it's not great, and I can prove it to you. People always say, but Mike, you have no proof the housing market's going to collapse by 50%. You're right, I don't. That's my opinion. But here's proof I do have that things are not what they're telling you. All right, so the Federal Home Loan Bank, what they do is they loan banks money, 30% of their collateral. So let's say they have a $1 million loan. All right, they loaned you $1 million for your house. All right, 2.8, I got 2.8%. So they loaned you $1 million. Okay, at 2.8. Well, because the rate went up to 7, they can only sell that loan for about 700,000, 800,000. So they're already a couple $100,000 underwater. But when people come in, the depositors, they want their money back. They don't have it. So they have to give depositors. Right now, you can go into your bank and get 5% CDs. 5% CDs, but you're locked in at 2.8. Look, at these banks cannot raise enough money. So what do? They go to the Federal Home Loan Bank and they give them the collateral. They go, I got this loan, and they'll tell them, that loan's worth about $600,000. So we'll loan you $200,000, 1/3 of the value of it. Not 1/3 of the million that the loan originated at. 1/3 of the value now, which is 600,000. So they'll loan the bank 200,000 and the bank then takes the collateral, right? They give them 30%. So this bank's never going to lose money unless, of course, it really collapses. But this is a government-sponsored program. So the Federal Home Loan Bank would be bailed out. But what's going on with the Federal Home Loan Bank right now? Okay, I'm going to show you a chart here. Let's see if you can see this. This is a chart. Let me hold that up. This is a chart of the Federal Home Loan Bank. Okay, so right here was a 2008. This spiked up to $1 trillion. But what's it doing right now? It's a $1.2 trillion. We're bigger than the 2008 spike. This is 1.2 trillion. 2008 at 1 trillion. That's where Lehman Brothers went down. Goldman Sachs would have gone down, but the government bailed out AIG for billions of dollars, which paid Goldman Sachs to keep Goldman Sachs alive. But Lehman Brothers went down. So this Federal Home Loan Bank is spiking like this. Now, why do the banks go to the Federal Home Loan Bank instead of the Federal Reserve? If they go to the Federal Reserve, number one, the Federal Reserve will come in and shutter their bank. They'll close it down. There's going to be a lot more bank failures, and these bank failures are going to be coming by the end of this year. You're going to see a lot more bank failures. We had Silicon Valley Bank. That was the start of it. That was in March of this year, right? Okay, and we're only in July. This is not over. The banking crisis is spiking up. So the Federal Home Loan Bank has $1.2 trillion out there right now in loans. And that's at the beginning of 2023. That's before Silicon Valley Bank went down. It's probably up around 1.6 right now. But this is the Federal Reserve's. They publish this on their website. Look, I'm telling you, part of me wants to see my channel just explode higher. Get all these haters in here telling me what an idiot I am. I want to see that. But if I have a big channel, they're going to take me off YouTube. They don't want you guys to know about this. But yet they publish it on their website. This is the Fed's website. This isn't me talking. I'm just the messenger. Don't shoot the messenger. We are in a time where this banking stress is coming to a head. This banking crisis is going to be terrible. What's going to happen? Well, they're going to have to print trillions and trillions of dollars to bail this system out. Now, okay, so what's going to happen first? Well, what happened in 2008? There was $1 trillion. Now we're at 1.2 trillion. This is the emergency system for the banks. Well, in 2008, the properties came down by 34%. And then the Federal Reserve, what they do? They said, we can't have this. In 2009, they printed $4 trillion. Look, in 2008, we were only 10 trillion in debt. We're 32 trillion in debt right now. So they printed $22 trillion to pump up this bubble bigger than ever before. What was the Fed balance sheet in 2008? In 2008, the Fed balance sheet was 1.5 trillion. Where's it at right now? 9 trillion. What is that? I don't know. 6 or 7 times as much. So to keep the market afloat, they're going to have to do it again. They're going to have to triple the debt of the U.S. We're 32 trillion. Just call it 100 trillion. We're going to 96 trillion would be a tripling of the debt if they do it again. And they're going to try to do it again because they're going to see the housing market collapsing. They're going to see commercial real estate collapsing. They're going to see all these stock market companies going out of business. They're going to see all of this, right? And what are they going to do? They're going to try to prop it up. And that's where we're going to start the hyperinflation when they do. We're going to go from 32 trillion in debt to 90 trillion in debt. Like that. We're going to go from 9 trillion on the Fed balance sheet. What are they going to do? 7 times that? I don't know. Okay, they'll bring it up. Let's just call it today. They bring it up to 50 trillion. They're going to buy everything. They have to buy everything because this is a house of cards that's going to come tumbling down. Now, once again, I expect the haters to come out. Tell me why I'm wrong. I never have proof. Go on the Fed balance sheet. This is from the Fed. This isn't from me. I'm the messenger. Look we have a problem. We are higher than we were in 2008. This is the lifeline to the banking system. The banking system is in a crisis right now. They don't want you to know this. I shouldn't be telling you it. That's why I kind of like us just having a little small group over here. There's nobody that knows about this. Go take take a poll in your local shopping mall. Not one person out of 100 will know what the Federal Home Loan Bank is. They won't know that it even exists. They won't know that they're loaning money to the other banks because the other banks are desperate and they can't go to the Federal Reserve because the Federal Reserve will come in and shutter the bank. Look, this is not good. This is not good. They can tell, you can believe that 3% unemployment stuff. You can believe that the economy is booming. You can believe this Bidenomics, whatever you want to call it. Look, they can blow the sunshine at you. Call your local realtor. They'll blow some more sunshine at you. It's a great time to buy. Hurry up and buy before the prices come down. Hurry up, get in, get in, get in. Look, I'm just the messenger. I just have a small little channel. They're not going to take me off YouTube yet for saying stuff like this. But if I had a big channel, there's people that don't want you to know about this. This is a little bit scary. Look, I don't have the answers. I don't know where to put your money. My money's in the bank, in those CDs. It's locked in there. Look at the FDIC don't have it. The FDIC doesn't have the money. They have 1 cent on every dollar that's deposited. They can't make us all whole. That's why we're going to print all the money. That's why we'll go from 30 trillion in debt to 90 trillion. That's why the Fed's balance sheet will go from 9 trillion to 50 trillion. Yeah, this stuff's scary. I get that. I get that. Haters, leave me comments. That's okay. You're scared. I understand that. Anyways, I'm Tall Mike. That's my rant for the day. I don't have the answers, but I'm telling you, they're not telling you the truth. There's a big problem in the banking system. The real estate market's going to seize up. It's all going to come crashing down. Terrible, right? Scary, right? If you have the answer, leave that for me in the comment also. I'm Tall Mike. Get out there, everybody. Hope I didn't ruin your Monday. Give me the thumbs up first. Why not? Bye-bye. We're going to hit 3,000 subscribers. Punch the button. Go ahead. Be one of them. Be number 3,000. That'd be great. Anyways, I'll talk to you soon. Bye-bye now.